Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 271 for July 27th, 2020. We are recording this live at 1 p.m. Eastern Time. My name is David Cosmeter. I'm the creator of TimingResearch.com. And today we're going to be talking about the S&P 500 and other markets. So this is going to be a solo episode with Jim, the option professor at optionprofessor.com. He's here to share his thoughts about the markets. So I'm going to go ahead and turn it over to him.
Hey, thank you, David, and welcome everybody. Optionprofessor.com will be putting on the meeting here today, and we're going to go over a lot of things that I think, in my opinion, our opinion, should be on the forefront of everyone's mind. Before we get started, I'm going to state that I am sharing with you my opinions and my observations. Past performance is not necessarily indicative of future results. And basically, you should consult your brokerage before you do anything and find out what's suitable for you. Now, what's going on today is we got a little bit of a pop in the markets. And basically, a lot of it has to do with some optimism because they're going to be sending more money out. And also, we did get a good sell-off last week, so we're getting a bit of a bounce back. Before we get started, I'd just like to take a look at a couple of the current markets. Now, I'm going to be looking at things here on a 1-month basis, okay? And let me just make sure that my machine here has it right. I got to put that 27th in there, and then we're all clean. Okay, so we're going to start with the major indexes, and then what we're going to go over, I'm going to give you a little idea of what's ahead, because we're going to cover a lot. We're going to go over the difference between the value stocks and the growth stocks. We're going to be going over the U.S. stocks versus international. We're going to go over negative interest rates and the U.S. dollar and how it's affected gold, silver, and the euro. We're going to go over how the bond market looks as far as TLT, as well as what they call junk bonds and preferreds. We're going to be going over crude oil, and we're going to go over some of the things like the other commodities like coffee, sugar, soybeans, and natural gas. So we're going to go over quite a bit of information. So if you want to get a pencil and paper, and this again will be my opinion and my observations. So we're going to start out and look first off at the NASDAQ, which is having a bounce today of about 1.21%. And as you can see, the moving averages here, it does look like it's trying to change. So this 10,500 number is kind of important to stay above. But you will notice that the blue line, which is the longer term average, is pointing down. Now, the three averages we're looking at, so you can have some idea, is going to be the 12-day, or the 12 simple, the 24 simple, and the 52. So those are your moving averages that we're looking at. You can see there are RSI is on there as well, and RSI is right around that 50 number. So if this thing turns south from here, that's not going to be good because obviously the RSI is right on 50. And when it's bullish, you'd like to see it above 50. And when it's bearish, you'd like to see it under. Okay, so right now you can see the NASDAQ is making a comeback, but there is some headwind here at around 10,700. But it is inverted on the 12 and the 24 because the 12 is now above well, actually, they're both right around the same, around 10,000. Like I say, this 10,500 number is kind of important. If it can move away from there, these averages have the ability to turn up. Okay, so that's what it looks like on the NASDAQ. Let's take a look at the S&P and see what's going on with the S&P. Yeah, because last week everybody took the growth off, and basically today they've been putting it back on. Because this week we have earnings with Amazon and Apple and things like that. So obviously they're hedging themselves in advance in case there's a surprise number on the upside. So anyway, on the S&P, let's take a look at what it looks like here. Now we were up about 1.21% on the NASDAQ, and the S&P today is. Let's see. S&P is up just 0.61. So as you can see, they're coming back into the growth and the tech, and they are not as enthusiastic about the other 495 stocks in the S&P. As you can see, this one's turning up as well. Similar though, you've got the moving averages here crossing a little bit here at 32.15, 32.18. That's a good number to stay above. If you started going south underneath there, would be not good, because that blue line, which is the longer term average, you are looking at something that looks like it's trying to roll over. So both on the NASDAQ and the S&P, yes, they're coming back up. Yes, they look like they're trying to turn, but there is some headwinds right ahead. 10,700 on the NASDAQ and 3240 on the S&P. Get above those numbers, and then you could maybe engage into a more bullish situation. There are people who think that the market is going to have a rough August, and if we stay underneath 3240 and 10.7, that could still be. But some of the quant guys who've been very accurate talking about this V-shaped recovery in stocks and have been pretty accurate with that, some of them believe that the next 7% move could be to the upside. So the news is very, very key here, and obviously whichever way it breaks, it could have a decent sized move. You really just have to follow the money. Right now, the money's on the upside today, but there's your lines in the sand, 32.15 and then 3,200 neighborhood. You start taking those two out, then of course the downside makes more sense. Okay, let's start with the first subject matter, which is value versus growth. Okay, the difference between the two grew to a tremendous difference of like 30% or more. Now it tightened up in the last 2 weeks again, but it's still way spread out, meaning the performance of growth in tech versus value. Value is generally the ones that are paying a dividend, and tech and growth are the ones pretty much that aren't. So, obviously you don't have to be a genius to figure out that the Apples and then Nvidias and the all those type of stocks have really outperformed things such as the value stocks. So that's no surprise. The question is as this recovery matures more, will the values play a game of catch up? And if they do, while you're getting 3% or better on some of these things, you could also get a heck of a catch-up trade. So I'll show you a little bit about what's going on in the short run. But these things on value are well underneath their long-term averages, that's for sure. Or excuse me, they're all-time highs. Okay, so let's start taking a look at some of the different ones we're talking about here. A couple of stocks that I've been watching here is Starbucks. And it's starting to look like it's trying to get off the mat. Again, this is way off of its all-time high. And let's take a look here. Takes a second to kick in. And then, yeah, so it's at 76.25 today, up 0.62, very similar to S&P. And it looks like it's trying to turn up. So, you got a good cross going on there. If we can get the red line above the green, that would not be a bad deal. And right now, the moving averages are coming in at 75.77. So we're trading above it. 76.04, we're trading above it. And of course, the blue line is rising here, and it comes in around 75 bucks. So obviously, staying above 75 bucks would be nice. And then, of course, if it takes out this high point here, which is around 77 and change, that would be very positive as well. So if we start taking out 77 and change, and these lines turn up, I think Starbucks would be looking pretty good. And underneath here, you certainly would prefer it doesn't take out 75. All right, let's take a look at another guy up here, which is McDonald's, which is having a good day today. And basically on Mickey D, again, another stock that's well off its all-time highs. Getting a good run here, right? So again, you got the moving averages coming in here at 198, 197, 193. The thing's trading at 202. So looks like it's trying to go somewhere. It's getting a little bit extended on a short-term basis from its moving average down here, but the flow of money seems to be coming in there, not leaving it right now. So that was another one that I thought looked pretty good. Look, some other names that that are not tech necessarily. Home Depot, and that's up a little bit here today. And as you can see, it's trying to break out to the upside. The numbers on Home Depot are 265, 264, and 260, and it's trading at 267. So today that's looking pretty good as well. To give you an idea, there's some ETFs on value and growth, okay? So let's take a look at a couple of value ones. On the S&P 500, VOOV. And again, these things pay pretty good dividends, so you know, you are getting paid to watch the movie. And this one's coming in at about 108. So as you can see, it came down to the blue line and held. That's not bad. And that comes in at about 108 even, right? And now it's trading a little bit above it. We'd like it to get above these lines here. So getting above 109 would be very good, and then taking out 110. So again, the blue line is telling us there was a turn down here on the monthly basis, but it is still having a correction from last week. But if it takes out 109 and 110, that might be something to keep an eye on, because again, this thing is also well off its you know, all-time high. The other stuff in tech and growth, you know, they've already hit way above their all-time highs, right? Because you know the Nasdaq is, you know, blown out its all-time high, where the S&P is not. Okay, and again, the idea is that the S&P will play catch up, and then basically as it plays catch up, maybe you'll get a stall in growth and tech, and that stall in growth and tech might rotate some money into this stuff. You know, that's a possibility. The other possibility is nobody wants this stuff until there's more evidence that the economy is turned and the virus is turned. But again, once we get that evidence, you would assume the market will be bid up. So sometimes, you know, if you get some strength out of something and you want to play the strength under the anticipation that by the end of the year, we might have a therapeutic. By the first half of next year, we might have a vaccine. And by the second half of next year, we might have a vaccine that's being used. If that's the way you want to bet, then you might want to keep an eye on these value things, because obviously they're not as bid up as high as tech and growth, and they pay money for you to hold on to them. And, you know, they've got room to go if people start becoming more of a believer. Okay. So that was that. Another one on the S&P, SPYV. And SPYV is the S&P 500 one, trades a lot of volume. And this one's been hanging around 30. You know, this one here seems to have a lot of support in that 29.30 area. As you can see, it's holding that line today. We'd love it to get above these lines here, which is what? 30.27, 30.28. Love to see it take out 30.60. If it does that, let's look at your RSI. Your RSI is hanging right around 50. You know, if it goes through the 50 number on RSI, you start taking out 30.60 on this thing. On a short-term basis, it would be getting on the bicycle pretty well. So I'd keep an eye on this one too. So that gives you a couple there. Another one that I'm watching here is Vanguard high yield. I think it yields 360 or better currently, which is a heck of a yield considering what, you know, people again who are in that 60-40 portfolio who don't think they're going to get any growth in that 40% of the portfolio or hedge, meaning what? You're at a 0.5% on the 10-year. You know, how much lower can it go? Could go wherever it wants. But is it possible with the gold taking off, with the negative interest rates? They can't keep it negative forever. Maybe they can, who knows? But if it's going to change, then 360 or better on some of these things might be very good. And if you look at the top 10 holdings or the portfolio holdings, these are not terrible companies that they own, and they're paying pretty good dividends. So this is another one where you come down here to the 81 neighborhood and held it. And now you'd like it to take out this number here of about 82. And of course, if you can take out 83, that would be turning the momentum up here pretty good. And the momentum on the RSI, again, is right around that 50 number. So these are the ones that are on my radar and our radar that we're trying to keep track of in case we can get value to play catch up. And again, you get pretty solid dividend cash flow on some of these things, which is, you know, you got to hold on to it for 6 months and it just is stable, at least you're getting some dough on it, right? All right, so I gave you some different ideas there on the value. Now let's compare it to what's going on with growth. And we can start out with the semiconductors, which are having a great day today. And let's see what they look like. Yeah, big day up today. And they're basically right back on the bicycle. So like I was saying, it seems like there has been a little bit of a change in the tide from the last week or two, in that they're ditching the value and they're coming back into growth and tech, and obviously semiconductors is part of that. Again, once this thing got above the blue line again, which is 161, it gave you a buy signal. Once it got above 162, 163, but we'd like to see if it can sustain up here. Why? Because you'd like to see the red line, which is the shortest term average, get above the green line. And that's only going to occur if they can maintain up here. Okay. Now, as you can see, the blue line has been pretty darn good ever since it was down in the 150s, right? So this thing was a great thing to use on the way up, but it did get broken. Okay, but getting broken does not mean it's permanently disabled. And it got back above the averages now, so you got to respect that for sure. And it looks like it's taking out the weekly highs. Now it has to sustain. What's the RSI telling you? Well, the RSI is back above 50, so there's nothing, no problem with that. It's not way above where the RSI was here, so it's not really totally confirmed. So again, is turnaround Tuesday going to happen tomorrow? Well, if this thing starts taking off down to 162 or 161, I would say turnaround Tuesday is happening. So let's see how it does through tomorrow, because again, sometimes things that are going up on a Monday or down on a Monday reverse themselves on a Tuesday. Okay, so that's the semis. Let's see what else. Let's take a look at a couple of individual issues that are popular. How about NVIDIA? If you have any specific stocks you'd like to look at the technicals on, or get an opinion or an observation on, you could shoot it in the chat room and David would be able to tell me. Okay, yeah, again, big move on NVIDIA today. Not surprising if the semis are up, right? Would love to see NVIDIA get above this high point here, which is 416. It's close to doing it. And then it seems like a traffic jam here between 410 and 415. So again, if you can get out of this traffic jam by getting above 416, then above 420, that would look a lot better. And the RSI is getting above 50 again. So obviously, if it's going to have a big run, you know, this is the place where it starts from. Let's see, Taiwan Semi. Okay. Again, up 11%. So again, the semis are doing great today, and there's your signal. So you've got the thing was pulling back to the blue line, right? Never broke the blue line. This thing's been carrying you since 58. Not a bad blue line to follow. Now you're getting way above it, so obviously you have to say to yourself, is it possible that this thing is getting a little ahead of itself? It's possible, but you know, breakaway gap, runaway gap, it might have one more exhaustion gap. But certainly, you know, initiating a position up here when you've got the support at 74, you know, that's a pretty good difference between the price and where you'd like it to hold. But certainly, you know, you can't fight the tape, and that's a darn good looking stock today, that's for sure. Amazon. Let's go over the fangs real quick. Yeah, Amazon's another one trying to turn. Can you see everything kind of turned down after it hit that 3,300, came back down, tried to rally, couldn't do it, came back down, and now it's trying to get back on the bicycle. Getting above 3,100 and staying there would be very helpful to get these averages to turn up. And the RSI, again, is hanging around 50. So again, a lot of these things are on the ledge. You start seeing 3,100 and 3,150 on this, then these averages are probably turning up. You start seeing sub 3,000, then of course these things would be reverting back down, and that would be a negative. So be very interesting to see which way it goes. It's trying to turn up, but it certainly doesn't look like Taiwan Semi by any stretch. Okay, Apple. Okay, with Apple, you're up to 377. This thing topped out around 400 bucks. Had a big drop down to 355. Right now, that looks like a pretty good bargain. But again, these things are above at 385 and 380. They're all inverted to the downside. So this thing has some work to do. You start getting above 385 and you can maintain, then obviously that would open the door for a good turn. Where's your RSI? Again, under 50. So if we did get above the 385 number, get through all that resistance, and the RSI turns up, well, you wouldn't want to fight the tape at that point. And then you use the blue line as some kind of as a base possibly, because look how the blue line did for you. You started out here at 340, right? Blue line really got violated once, but then it got right back above. But it was rising. You see, where's the average? Right now it's flattening and trying to turn down. Even the green line, it got violated, right? But that's the 24 average. But after it got violated, it was still rising and it got back above. So, you know, this thing, 385 seems like a pretty big number, and it'll be interesting to see if it can take that out with what they announce and all that stuff. Again, today, they're putting back on the risk in tech and in growth. And I'm showing you the numbers that kind of show that. Facebook?
Hey, Jim.
Yep.
Jim, we've got a request for Intel.
Intel, sure. Now, Intel is got hit hard. So the question is that 50 number going to be a bargain or not? It's certainly a discount to 60, so that ain't bad. But the thing to them, they had a delay in one of their products, a product that ADM already has. So you can see here, you know, it is very, very oversold. Now, if you were short-term trading it, you wouldn't use the monthly graph. You might use the 5-day. So I'll switch it to a 5-day and see what the real shorter term looks like. Okay, on a 5-day, you know, it's still having a hard time, but the blue and the green are getting together here right around the 50 number. You'd love to see it above what? You'd love to see it starting to trade above 51. If it started trade above 51 and the red could get above the green, that's the first step in trying to turn this thing up. Your RSI is way down here at 32. So it's well underneath the 50. Again, this thing has been in a negative mode basis the RSI, you know, for a little bit of a while. Now, did you get a sell signal on it up here? Well, you know, obviously when all the things cross up here at 61, you know, that was kind of the time to dump it, you know. And then, of course, they had bad news. But, you know, before they had bad news, you had the red crossing under the blue, crossing under the green. You had the green crossing underneath the blue. So you had some warning there. You know, as an option guy, what I would have probably said to myself is, you know, this company's coming out with earnings, and if they're not good, it might not do well. So why not sell a 65 call while it's here, take that premium and buy yourself a 58 put. And then at least you have some insurance at 58. So when it drops down to 50, you got what? You know, you got a protection. You're not losing between 58 and 50. And then as far as 65 call, you know, you would have had to give up your rights at 65, but in hindsight, that certainly didn't matter. So, you know, these are some of the things that at optionprofessor.com, you know, after decades of doing this stuff, is kind of a second language. So anyway, yeah, I mean, I guess the only other thing I could do is if I could get a longer term graph. I don't know if they'll give me that on this. Let me see. I'm trying to look at the 1 year. Yes, even on the 1 year, you broke it. This thing's been broken. You know, this is like somebody who broke their leg. It's going to take some time maybe to recover, right? There's the 5-year graph. Now you got lines in the sand here. You know, 45 looks like a number that it was at, but I mean, that's the momentum is all pretty darn lousy right now. If it could get back above the blue line, which is 56, that would be very helpful. So, you know, down here, you're trying to, you know, buy, kind of like buying, hey, listen, if you bought down here at 45, was it a bad idea? No, but you had a formation. You see that low surrounded by higher lows? Okay, once it does that, you can take your stab at 46, put your stop underneath 43, and take your shot because you got a formation to trade against. You know, same up here. This thing hit 65. It has lower highs. Okay, you know it's extended. You know it hasn't taken out the 70. So you're concerned about it. And then what do? Well, if you want to hedge it, you sell something like the 70 call and buy the 60 put. And then anything under 60 would have helped you. Not helped you, but you would have offset the risk. So, you know, there's no formation here except this low right here, which, you know, it's not really the kind of formation I love. But if I had to do something here at bayonet at my back of my head, if I did take a shot at it here, I'd put it on a very short leash at about 49 bucks. If you want to play pick a low, which is a tough game to play, but can be profitable. But generally it happens, in my view, it happens if you can see a decent formation. Look at all these high points. You got a high point surrounded by two lows, that's the time. You got a high point, can't take out the high, then go. Well, here, if it can't take out 49, then you might be onto something. And I don't know what the call options are going for, but a leap or a long-term equity option going out a year, if you think that these guys are going to be in the 5G deal, if you think these guys are going to be in the cloud deal, if you think these guys are going to be in, you know, the digital recovery, then, you know, you might look at a long-term option, limited risk, and say that, hey, this thing got whacked from 70 to 50. This is not a bad company. They just have a delay on their product. It's not an elimination. So maybe the news will change because, like I say, nothing changed. Everything is transitory, right? Everything's transitory. So is this a 50 number transitory? If it is, and the guys who buy long-term calls down here, 6 months out, I mean, a year out or whatever, you know, they could get a rebound. So again, what's my feeling? My feeling is the weakest line in the stand here is at 49 bucks about. It's just really bouncing off the dead cat bounce right now. And obviously it's oversold basis these averages. So certainly it could rally, but a limited risk option would make some sense for speculation. And then of course a very short leash, because if it takes out 49, you know, you don't know if it's going down here or not. And again, they really did freak out about that delay on one of their chips that ADM supposedly already has. And I think that's the news on that. Okay, let's go back to what we were trying to talk about. So I gave you some ideas on growth. It seems like they're going into growth, but you know, for me, I'm kind of focused on the value side because again, longer term, it's way underneath its all-time highs, which means it's got a bang to the upside potential, and it pays good dividends. So you get paid to watch the movie by getting a dividend, even if it goes sideways. You know, you're at least getting some money coming in from the dividend. And then ultimately, if this recovery is going to stick, if we're going to see the virus, you know, get a therapeutic and get a vaccine, then, you know, the future of the value should be pretty good. Also, if you notice, value and the transports and the Russell, those are the ones that have not hit their new highs. So if you go back 20 years, you will not find any major rally in stocks, meaning S&P or NASDAQ, that did not include those guys. So if they can't get going, to me, it puts in question how long NASDAQ and S&P can keep going. Because historically, they have not had extended runs in the last 20 years without the Russell, without the transports, without value. Okay? So on a bigger picture, they better get going, in my view. All right, let's take a look at international because, you know, that euro is going pretty good. And so, you know, the dollar has lost value, and the valuations on some of these international ones are very worthwhile compared to the U.S. So I'm going to just give you some international ETFs that I'm looking at. And there's many, so don't just look at these. I'm just giving these as an example. This is all world ex-US, and let's take a look at it. Now I'm looking at a 5-year graph here. Let me look at something a little bit more short term. Well, let me give you two vantage points. You got the 1-year average, and that turned up here, and the averages all look pretty good. You got the 5-year averages, turned up. The red has crossed the green. Still got some work to do, so it has to sustain itself here. But I like the fact that you can put it on a fairly short leash here as far as the money is concerned. So let's look at the last 6 months. You see it's trading at 49. You got the blue line that went positive at 43. It comes in at 48. You know, you got all three of them poked up pretty good. So, and it's not real extended. So could there be value here? Well, there has been value from 43 to 50. I just don't know if it's going to continue. Nobody does. But the numbers don't look bad. And again, your line in the sand down here on the blue line, which as you can see, once it breaks, it tends to trend. Once it breaks, it tends to trend. So, you know, keep an eye on it and see how that goes. But if international is going to be good, that's one that I'm keeping an eye on. Turning to Europe. You know, the euro has been going nuts. And obviously, they just passed that package, which showed a lot of cooperation on the monetary side in the whole union. And people think if they can cooperate on fiscal, there's a lot of value here. So this is a ETF that just goes to Europe. And there you go. Turned up here at 44, trading 53. All the lines look pretty good. Can it get above this 54 number? That would be nice. But again, the flow of money seems to be going into this stuff, not leaving it. That's Europe. All right. And what about in Asia? We've got the Pacific. And this is for the Pacific area. And this one is got money coming into it lately as well, as you can see. So, you know, and the blue is crossed over to green, which is not a negative. And the blue line's going pretty good. The red line's over to green. So, you know, and the numbers come in pretty close. I mean, right now, 63, 64, 65, and the darn thing's trading 66. Not a lot of real estate between support and what? Where it is. You know, you start getting into stuff like Taiwan Semi up at 85 and the support's down at 60 or 70, you know, you're getting into something pretty stretched. So anyway, that's that. And I think there was one more I had for you. Yeah, and this is emerging markets, right? You heard of those? So there's a little rotation international. Whether it's going to stick or not, nobody knows. That's why we follow the tape, right? All right, so here you go. You've got, went positive here at 36. Now it's at 43. Nice line. Nice trend going on. A lot of support there at 40. You can see at 41, there's a couple of double tops. So 40 is a big number for it. And again, you know, it may have a pullback, but again, you know, using this blue line as a guide, as long as we're trading above it, maybe the what do you call it? The emerging markets won't be a bad place to go. All right, let's take a look here at, so I gave you a little idea on the international picture. You can see that there is money flow going in there. You can also see they're not that far away from their averages. So if you wanted to keep it on a shorter leash, you got an average there at 40 and 42. The darn thing's trading at 43. Not bad. Okay, because you can always come back in. You know, in this day and age of no commissions, you know, there's no reason to sit on things that you don't think look right because you can always come back in. All right, the US dollar. This thing is having trouble, and it's having trouble real simply because Powell has gone to a situation where he's going to buy everything he can and keep these interest rates low, 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 low. So everyone can go out and borrow, 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 and keep the economy going. You buy a house, you're going to borrow. You borrow for cheap, it doesn't cost much. You want to buy a car, you're going to release it. Got no interest, it's going to be cheap. You want credit cards, they go down in yield, you know, in cost. So the whole thing is about getting everybody back on the dope of what? Credit, right? And how do you do that? You make credit very cheap. Problem is that they have inverted the curve from where the break even is higher than the actual yield. The way that means is as simple as this. You're getting paid 0.5% about on a 10-year note. If inflation is 2%, then 2% minus 0.5%, you have a negative 1.5% yield. That's not going to help your currency. And if you have 11 or 12 or 13 or whatever programs they have, printing money and giving it away, that's going to get people concerned about your currency. So, and then if you have a virus that is not under control, that's going to get people concerned about things as well. So let's take a look at the US dollar index here. And let's just see if I can get the contract up here. Okay, here it is. And it'll be pretty clear when it turned negative. Okay. Okay, it turned negative, obviously, right up here at 99. In fact, in the updates that we give, we told you about the range being like 10. See how the range was here, 101 and 101 and 99. See? And it went there for a while. Boom, 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 boom. So once it took out 99, it was sayonara. And there you go. The green goes underneath, the red goes underneath the green. They both go underneath the blue, and there you go. Now it's getting extended on the downside, but you don't know what's going to happen because it's in what they call a little bit of a free-for-all. So if you go back over to a longer-term graph, you could get an idea where it might be going, and I'll show you the 5-year. So on the 5-year, this thing can go all the way down towards 88 or 90 if it wants to keep going, because we're underneath the support right there. So it's holding a little bit here at 93, but it obviously is in a bit of a free fall. And that's a pretty big drop in the dollar. And that's why the metals are going up, and that's why the euro is going up. The three main reasons are global money supply is going through the roof. You've got a yield on the 10-year that is less than break even. Last time that happened was 2012. And the last time it happened, three things occurred. At some point in 2013 and 14, yields went back up. The other two things that happened, stocks went up about 40% in the next 2 years, and gold dropped 40%. So that is something to keep an eye on. If you start seeing the 10-year note going up in yield, and that's not going to happen tomorrow, but when it does happen, realize that the last relationship we had like that back in 2012, for every action, there was a reaction. And the action of yields going back up, the reaction was buy the stocks, sell the metals, and of course, the bonds you sell as well because yields are going up. Okay. That's just history, doesn't have to repeat itself, right? Past performance, not necessarily indicative of future results, but what did Mark Twain say? History doesn't repeat itself, but sometimes it rhymes. That's why you got to keep an eye on it. Okay, what else do we have here? So there you go. That's your evidence that the dollar's in the downtrend, right? Okay. Also says it's kind of extended. Let's take a look at the euro, and then we'll look at the gold and silver. They have an old saying, those who live by crystal balls are going to be destined to eat ground glass. So rather than being predictive as much, we just try to really follow the money using the prices and using the moving averages. Because we have no idea of exactly where anything's going, and all the pontificating in the world doesn't change that fact, right? Okay, so where are you here? You got a big run up. And this is on a what basis here? I think this is a longer term basis. Yeah, this is a 5-year. So you can see this thing was in a downtrend for years. This is 2018. And here you go for 2 years, you're going way down. But now it's turned up. The red crossed the green and the blue. And so this thing gave you the buy signal, where on our updates, we said 110 was the buy signal. And obviously that was a very, very good observation on our part in our weekly update. Okay, so now it's very extended, and now you're up. Whoa. We have somebody doing some work outside. Be careful. 117 area up here. The high up here has been 118. Okay, so 118 and change might be a neighborhood where it could have some resistance or some, shall we say, a stall. But right now, let's see what it looks like on a short-term basis. The 5-day. Okay, on the 5-day, because if you're trading it, you want to put it on a shorter leash. On the 5-day, the red line here is coming in at 117.65, which is pretty much where it's trading. So if it starts breaking under there, that would be a little bit of a signal that it's pausing. And if it gets under 117.45, and basically if it gets under this area here, 117, it might be a signal that it might be rolling over a little bit. It penetrated the green line here a little bit, but the blue line's been pretty good. So if you're position trading it, as long as it's above this 117, 116.94, that would be something that would still look pretty good. But let's look at the RSI, because you had a high point here and a high point there. Let's see if the RSI confirmed it with a new high. Not really. So that would be of a concern if I was a short-term trader, that this high on the RSI and this high up here did not show another new high on RSI, which means this could be some short covering. This could be some exhaustion. So bear in mind, it's very strong, but if it started breaking underneath that point, this point here, and that point there, that might be an indication of a little bit of a give up. But you can't fight the tape, and you can't badmouth Santa Claus. This thing's been great since 110. We've loved it since 110. But starting a new position at this level, that's a tough call. All right, let's talk about gold. The whole world's long gold. The whole world's right. How long are they going to be right? Let's find out. All right, on a 5-day basis, the gold also is showing a little bit of a rollover here. It's at 1930. You have a high point here, came down, couldn't take out the 1940. If it takes out this area here, which comes in at 1925, that would give you a little bit of a rollover on the red line, which is already starting to roll over. And then, of course, the green line, this is on a 5-day basis, very short term. But the green is at 1933, and the other is 1932. So the red has crossed over the green. And on a short-term trader basis only, that's, obviously your first sign. But again, this trend has been very good to you with the blue line, very good to you ever since we were down here at 1820. So you got a nice $100 run out of the blue line. So again, there's no evidence of a turn. And the blue line comes in where? 1920. So we stay above 1920, then everything still looks pretty cool. All right, let's take a look at silver, which really took off. Now, the silver was the one that we had focused on in our updates. Why? Because I'll show you why. Similar to the internationals, they weren't that far away from their moving average when they turned positive. Let me show you. These things turn positive. Well, I'm going to show you a little longer term so you get a better idea on a 6-month basis, which is only the beginning of the year. It's not like it goes way back. But notice here, they all turn positive right here in the 16 area. And that's where we said that's the time to get on board, because you got your lines crossing, and the market took out this point here, which was 1650. And after it took out 1650, the only thing left was to take out 19. You see the line here? That high point there is 1914. And you see this high point here was 1903. So once you blew through 19, which is right here, it took a little bit of time, a couple of little days, but that's when you got the acceleration. So that's why in the update, we were talking about getting positive at 16 to 1650. And that has obviously been a very good comment. Now you're up in the ozone. And I think it's hard to say what's going to happen. Maybe it's going to go. Don't forget, the last time gold was at this number, silver was at 40 or 50 bucks an ounce. Now, I don't think it's going right up there, but it could. Anything could happen. But the point being is you're initiating up here and you work with a 5-day moving average, because you got to put this thing on some, here you go. On the 5-day moving average, you are getting a little bit of settlement. You get under 2420, and that would put into play a correction back down to 2380. 2300 should be decent support if you're still long. underneath $23, I think that a more significant correction could be in play. Right now, though, there's your blue line at 23.80, and there you've got a little convergence at 24.40. You're trading at 24.50. So again, you start breaking under 24.20. That would be something telling you on a short-term basis it's turning a bit, and then of course on a short-term basis, 23.80 seems to be where the blue line is. Okay, great move though, and obviously if you have multiple positions, taking a little bit off the table is not against the law. But there you go on your silver and gold. All right, I'm going to have to pick the pace up here to get through the Encyclopedia Britannica here, which is what I guess I'm trying to do. TLT, we're going to the bonds. I don't know how interest rates are going to be able to stay low, especially on the long end. This is a 20-year instrument. I don't see how they can keep these rates low when it's inverted and the metals are going through the roof and your currency's going to the floorboards. I mean, how long are people going to loan people money, whoever they are, I don't care if they're the government or anybody else, for 1%, 20 years out? They only owe you 1% a year, and they don't owe you to give you the money back for 20 years. I mean, that seems like a pretty good deal for the borrower. So, and now you're loaning to a government whose currency is going down. You know, so is somebody going to wake up and smell the coffee and go, hey, that's not a good deal. I'm giving you my money. You're giving me 1% for 20 years, ballpark figure, and you don't have to pay me back for 20 years. And the currency you're going to give back to me is falling dramatically. I don't think I like that deal. So, and wouldn't you rather actually be in European debt since their currency is actually rising and it's about the same yield or, you know, in the same ballpark? At any rate, this thing here is still doing well. Hard to believe, but it's still doing well, which probably means Fed's buying it. The moving averages are all positive. 169 looks like a very big point. Let's see, it looks at a 6-month basis. On a 6-month basis, yeah, 164. See, all these lines are positive. That means interest rates still look like they could drop. Hard to believe. Has to be central bank intervention, right? So there you go. If we got under 164 on this, okay, that would be something to keep an eye on. If you go back 5 years on this thing, you can see that there was a blow off top at 180. Now, is this just an ability to try to come up here? Because there's your double top here around 170. So obviously, this trend has been very good with the blue line, but it could still come back down towards 150 and still be in a bull market. So let's look at two other things that seem to be going on right now, which is high yield. You know, people need to get a return on their fixed income. You're not going to get it at money market, and you're not going to get it out of treasuries. So it's forcing people to take more risk with part of their portfolio. And one of the places they're doing it is high yield bonds. And because the Fed has actually bought some of this stuff, people think that they got a backstop. Now, here you go, looking at this. It's up against this resistance with the blue line. Be very careful of HYG here, because you know what? If people realize that high yield means high risk, then basically it could turn down from here. But if it starts getting above the blue line, you see the red has turned above the green. And this is on a 5-year basis, so this is a little longer term turn. As long as this thing stays above 81.82, and it can get above 84.50, 85, then maybe people are going to come into this stuff with a little bit more money because they need yield. So keep an eye on HYG. It seems like it's on a ledge either way. Another place people turn to make some more income is preferred stock. PFF is the ETF. And this stuff pays, you know, the yield is 5% or better, but there's risk to it. Okay, let's, now on the high yield, you know, some of the people think that 10% of high yield is going to have defaults, which means 90% is not going to have defaults. And if you throw IG in there, investment grade, and you mix it up, the default rate obviously drops even further. So the idea out there is people will put a mixture of investment grade with high yield to come up with a reasonable return on their fixed income. And because they're mixing up the soup, it's not going to kill them if 10% of the high yield ends up defaulting. All right, preferreds. again, similar to high yield, up against the blue line, what's going to happen? If it gets back above it, then maybe the normalcy where it generally trades between 37 and 40 will come back into play. And again, the yield on this is pretty reasonable too. But it's right up against the wall here. And if it starts rolling over, that means we could have a correction in August. It could mean that this is going to go back in the soup. But again, it's really a similar chart to the high yield. All right, there's your fixed income there. And now I'm going to go over to crude oil. Now, crude oil, I thought would have, well, we all thought would have some trouble up here in the $40 range short term because it had come a long way. And it seems like OPEC is relaxing some of the supplies. Inventories have risen, and now there's some reports that demand is backed off because of the virus. Having said that, there's a lot of people that I see, and I'm sure in your neighborhoods as well, all on the freeways. So it looks like the demand's coming back pretty darn well. As far as supplies, they killed the frackers. The rigs have been closed in a substantial amount, and OPEC generally has cut back on their stuff as far as, their supplies. Let's look at a 6-month deal here on crude and see if it tells us anything. Yeah, there you go. So it turned positive at 28 bucks, which is when we obviously on our update told people about that. And it's been positive ever since. Now, if we get under 40, I think it's under 38. If you get under 38, that's going to change the dynamic. So that's my line in the sand, 38 bucks. Right? That's what we're thinking, 38. Again, could come down and test 38, and then that would be it. But right now, the flow of money has been into the oil, and the surprise could still be on the upside, particularly if the demand numbers are strong against the backdrop of the frackers, the rig count, and the OPEC. So keep an eye on it. But again, we were suspicious because look at the rally it's had. Now, we think next year, if the recovery continues as we anticipate, going into the 50s is still possible in the cards. So we're not negative on this stuff. We just thought in the short term, it might take a pause to refresh. So far, it has not done that, though. Let's look at natural gas. A lot of people are now looking at natural gas. Natural gas. All right, let's look at the November contract because that'll take you into the winter. Okay, natural gas. Yeah, you can see it's trying to make a turn here, but it's a little sloppy. Staying above 23 is a very important thing. The red line is trying to get above the blue. That's not a negative. The price is trading above all 3 averages. That's not a negative. And so keep an eye on it because it's coming out of a lower area, I believe. This is a 5-year graph. Yeah, you can see it's got resistance with that, but can you see there's a traffic jam in there at 174? And if the red gets above the green and it can turn around, there could be, and look at the lowest price in 5 years, right? So keep an eye on the natural gas because there could be some value there because it is coming off of a lower region. All right, last thing here is going to be a couple of agricultural things. So I'm showing you in the soybean area, November, and that is, hang on one second. All right. Got some people outside doing some work. They're making some noise. All right, on soybeans, look, trying to make a turn here, right? If we can stay above 860 and we take out 910, 920, 950, you see this area here? This thing has some potential in my view, our view. And in our view, there's some potential there. It is trying to make a turn. This 860 number is very important. 880 is very important. And again, 920, 940, very important. Keep an eye on it. Next one is sugar. Let's go out to March of next year. You know, sometimes as we come out of a recession, as we're trying to come out of the recession, sometimes some of the commodities can have a pretty good time of it. Gold and silver and oil have already started. Some of these other things may get started. Here you go with this stuff here. Still, it's trading right now between 11 and 12. You can see if you can get above this high point, which has had a hard time doing, which is around 12.25. That could open the door to this thing. And again, this is a 5-year graph, so it's coming out of a low area, and that spike down there does look like some type of a capitulation. So keep an eye on this stuff. As long as it's trading above the 11 and you can get above 12.15, there could be a future here. Last one is the price of coffee, which has recently started to go. In our update, we've been saying that anything under 100 was a gift. And so far, that's been the way it works. So let's show you the coffee situation here. And again, this is another one coming out of a lower region. And there you go. So you see this is a 5-year graph, low at 85, low at 90, low at 95, and now it's getting above all the averages. Got to get this red number above the green and the blue, which will take a little bit of time, but it does look like it may want to go someplace. This is another one that I'm monitoring very closely. All right, guys, we are coming to the top of the hour, and we certainly went over a lot of information. Here's the situation that we'd like to let you know about, optionprofessor.com, optionprofessor.com. You go to the website, you put your email in, and then every week you'll get a market update which gives an opinion and observation on what Option Professor is thinking. And basically, I gave you a little quick overview. Obviously, in the update, we can get a little bit more involved in every area. And we also encourage, if you have any questions, to shoot us an email or basically let us know in some way, shape, or form. But if you have anyone else that you'd like to look in on this, it's optionprofessor.com. You stick your email in, and you get the free market update each week. In addition, Option Professor this month has initiated a hypothetical trading account. And so far this month, the account is up 15% and 80% winning trades. So 1 month does not make a trend, but it's not a bad start. So again, if you'd like to find out different things that on our radar list and what our opinion is and what our observations are, optionprofessor.com, and then basically put in your email, and then you're in the queue. It's been very good speaking to you guys today. We obviously tried to give you a wide zone of things that are going on in the world. If you have more specific questions, again, put your email in there and we'll try to help you with those. And again, do go to the website, optionprofessor.com, and get into the queue for the free weekly update. I think there's some value there. We were on top of the silver situation. We were top of the NASDAQ when it was down in March. We had a high beta ETF portfolio in the semiconductors, in tech, in mega growth. All did very, very well. A couple of months ago, we started looking at the value. That's been a pretty good deal. So there is some value into the market update, which is free of charge. So go to the website and take care of that. Right now, I'm signing off, optionprofessor.com, and I'm going to give it back to David. David, thank you very much, and good luck and good trading to everybody out there.
Thanks, Jim. Yeah, lots of great info today. So just a reminder, like Jim said, he has started working on a hypothetical portfolio. We're finishing up the technical details on that, but if you're interested in learning more about that, you can sign up at optionprofessor.com or reply to any Timing Research email, and I can make sure that you get updates on that when it's ready to be released. But you'll be able to follow Jim's trades in real time and have those in your own portfolio as well, along with getting all the info that he puts out every week. So, all right. So, yeah, just like I said, optionprofessor.com, or I also posted a link in the chats that you can click on and get his updates. So, and just a reminder, please be sure to subscribe to Timing Research on YouTube and your favorite podcast directory. And you can also go to TimingResearch.com to get access to the archive of this show as soon as I can get it posted, and any of the past shows as well. Thanks, everyone.
Thanks, David.